In this video, I'm going to be talking about human futures. What does that mean? And in particular, when you hear that in the context of social media sites gathering your data for the purpose of trading in human futures. And in particular, when you hear people talking about social media sites collecting information to use to trade in human futures, what does that even mean? Because obviously this is going to be an ethical issue when it comes to the economics behind social media platforms and the way that algorithms work in those platforms. And so you need to understand basically like a very basic understanding of what futures are and how your personal information might be used, either against you or actually more likely against someone else. First of all, it's useful to think about the finance world as trading contracts, where contracts are really just anything you write down on a piece of paper and say, I'll sell you this piece of paper, and the promise involved in this piece of paper is backed up by the law. So, I mean, you remember when you were in elementary school, you might have written IOUs, like maybe you're at the lunch table and you're really wanting some cookies, your friend has some great cookies, and you're like, well, if you give me one of those cookies, I'll write an IOU that I'll give you one of my future cookies, and you write that down, and that piece of paper that says IOU is something that can be traded in the future, and in that case, maybe enforced by the teacher that she won't allow you to go back on your promise to your friend. But in the real world, of course, those guarantees on the piece of paper are backed up by courts. Okay, so that's generally how the finance world works. Now, we're going to imagine a farmer. Now, I'm going to use a farmer example, and then I'm going to draw parallels between the farmer example and your data. So, farmers have fields with crops, and they have some risk based on the weather. If there's too much rain, the crop is ruined. If there's too little rain, the crop is ruined. So really, they're always hoping for that sweet spot when their crop is going to yield manyfold and they can sell that on the markets. But of course, they don't like having that risk. They would like to buy insurance that says, if there's a really bad year in terms of drought or flooding, we don't want you to have no money. So maybe the farmer is willing to put up a contract that says, I will pay you a certain amount of money now if you will pay me in the case of flooding or drought. So you can imagine a number of different contracts of that style. Okay, fine. Now imagine that there's a piece of paper that the farmer draws up, and it says, whoever buys this piece of paper from me has access to field A, and field A is his cornfield for that year. So the farmer could sell that piece of paper, and in which case he owes the corn to whoever buys that piece of paper. So that might be an asset. It's the asset of that farmer's cornfield. But of course there's risk in that asset. If you buy that cornfield and it's a rainy year and there's floods, then that piece of paper that says you own whatever is the yield of the cornfield, that's a useless piece of paper. So when you decide how much you're willing to pay for that piece of paper, you're going to be thinking about the risk, thinking about the probability of floods, probability of droughts, and the historical patterns in that part of the country where that farmer is growing corn. And I'm not going to overcomplicate this. This video really is not about actual futures and fully understanding them. This video is trying to get you to understand human futures. So we're imagining this farmer's asset that is sort of the rights to the yield of corn and whatever that corn sells for in a year. And if you're a trader buying and selling contracts in cornfields, you could actually benefit from extra information about the weather, right? Like if you had a direct phone line to Mother Nature or God or whoever determines the weather, that would be really lucrative information because you would know when to buy and when to sell these contracts that have to do with that particular cornfield or cornfields in that area. So the more information about the weather, the better it is for buying and selling in corn futures. Now, given that you'll never have a direct line of communication with Mother Nature, another option for you would be to come up with a model of weather patterns that's better than any existing weather pattern models out there. And if you can do that, if you can improve on predictions about weather, you can actually make a ton of money in corn futures or cattle futures or futures that have anything to do with farming, because almost all farming depends on the weather. So I'm going to use that example to think about human futures. So just like the weather is a risk for farmers, there's other things that are risky for companies, and one of those risks is government. It could be that a company is going to have a really good situation if one political party wins and a really bad situation if another political party wins. Same with like cultural trends. It could be that a company will do really well if meat-based diets take off and really poorly if carbohydrate-based diets take off. It could be there's companies out there that depend on whether people decide to pursue higher education. So that might be the risk for certain companies. And you could just go on and on with a list of different human behavior factors that are going to predict the success or failure of companies. So just like before, the number one way of handling this is to call up God or Mother Nature and ask them, what's the future of these particular factors that are going to influence a company's profitability? If you can do that, you can make a ton of money in the futures market. Since we can't do that, the best option you have is to come up with better prediction models to predict people's behavior. And this includes their political behavior, it includes their health-related behavior, what they eat, what they buy. It includes their attention-related behavior, what shows do they watch, which influencers do they pay most attention to. It includes all kinds of human decisions that we make throughout our lives, that if you can better predict human behavior in these cases, you can make a ton of money in human futures. So of course, what's the most important factor in predicting human behavior? Well, it's where their mind's at, it's sort of what they're paying attention to, it's their clicks. And if social media sites can glean information that will help people better predict how the election's gonna go, or how many people will pursue higher education, or what the next diet trend is gonna be, that could be really, really profitable in the futures market, and that's the human futures market. So that's just an example of the way that the data that's collected from you gets used, and it's not really about your personal clicks, it's more about them making money by predicting things about companies. Now, I admit, that doesn't sound that bad, right? And this is probably enough for one video, so maybe I'll move my thoughts on this to another video at some point. But why could human futures be a problem? What if the futures and the futures markets, these models that predict human behavior, start to get used to manipulate people? So it's not just that your company's success depends on the election and how many people choose to homeschool their kids and all that stuff. Maybe now that information about human behavior starts to get used to actually steer you and steer the population in certain directions. And that's when it starts to get a little bit riskier. And that's when we can start to worry about this a little bit more.